So honestly, I had never heard of Ashish Kacholia until I made that video on Dolly Khanna and noticed many comments requesting me for a video on him. So I was curious and thus started this quest of uncovering more about this highly successful investor, which I'll reveal in this video as we examine who is Mr. Kacholia, as in his life's progression, his investing strategy, what's his current portfolio, the lessons we investors can learn from him, and finally, if I were to copy his trades, if I were to shamelessly copy Mr. Kacholia's moves, then how would that portfolio have performed over the last 2-3 years? Let's begin. Right, so we start with the early years, and after completing his engineering, Ashish Kacholia pursued an MBA from JBIMS in Mumbai, that's the Jamnalal Bajaj Institute of Management Studies. His career began in 1993 at Prime Securities, a Mumbai based brokerage where he started from the trading desk before quickly ascending to his role as head of research. He later joined the equity research desk at Edelweiss, gaining valuable experience in institutional broking before venturing out on his own in 1995 when he started Lucky Investment Managers, a broking and investment advisory firm that managed portfolios of high net worth individuals. It was during this period Mr. Kacholia began his own investment journey, starting modestly but quickly developing a talent for identifying scalable businesses with immense growth potential. In 1999, he ventured into the entertainment technology space when he joined hands with Rakesh Jhunjhunwala, Neeraj Roy, and others to co-found Hungama Digital Media Entertainment. The turning point, however, came in 2003 when Mr. Kacholia shifted his entire focus to stock market investments, carving out a unique niche in mid-cap and small-cap stocks, which was an area that was largely overlooked by most investors of that time. As a person, Mr. Kacholia is known for keeping a low profile. He avoids interviews, rarely tweets, skips podcasts, and generally steers clear of any publicity stunts. While this understated approach makes my job of uncovering his story a lot more challenging, I've managed to piece together some fascinating insights on his investment strategy, so let's dive straight into it. Okay, so Ashish Kacholia's approach to investing isn't flashy. It's methodical, data driven, it's rooted in fundamentals. And if you have some time, I highly recommend checking out this video where he breaks down the key factors he considers when identifying companies to invest in. In fact, let's start with this. And the first principle, in the words of Mr. Kacholia, is
framework तो यही है boss कि find out some companies which have a moat and which are not very easily replaceable.
So this includes companies such as, actually, let's do this. Let's go to Tickertape and search for a feature of theirs called Market Movers. Ah, there it is. And what exactly is this Market Movers feature? Well, think of it like your backstage pass to see what the big players, the HNIs, the institutional investors, as in what are they buying or selling, which, as we all know, can be a great way of identifying potential stocks for your watch list. So using this, you can view the largest deals over the past weeks or months. You can even sort by traded value to see where the action is. And here's the best part, you can download all these filtered deals to do your own in-depth analysis, making it a very powerful tool for informed investment decisions. Okay, so let's scroll down a bit until we come to all deals. We now click on party. We then search for, अरे यहाँ तो पहले से ही आशीष कचोलिया है. So we add in different variations of his name, and what we are presented here with is a list of companies. What was bought, what was sold, how much was transacted, at what price, and this data goes more than a decade back all the way until 2012. I was examining his more recent buys, and look here, there's SG Mart, which started operations just last year and has given a guidance of 50,000 crores of top line by FY30. There's also Sky Gold. Oh, it seems he's sold some of his holdings there. So I'm not in agreement with Mr. Kacholia, and pleasantly, ever since I featured it in my newsletter, Sky Gold is up by some 30%, so please subscribe to my newsletter if you haven't done that yet. Also notice Mr. Kacholia is not shy of investing in companies that are not listed on the main board, that is, these companies are listed on the SME exchange. For instance, he's picked up a good chunk in Megatherm Induction Limited, which is building a large transformer manufacturing facility in the east of our country. And I also see Aimtron Electronics, which is into ESDM solutions, that is PC board design, its assembly, and this company also focuses on high value precision engineering products. Many of the companies I've named and what I've seen through this list have a very unique operation, which I think is what Mr. Kacholia means when he says that the business should have a moat and a non-replaceable setup. Another characteristic Mr. Kacholia looks for is what he himself calls the demonstration effect, And in the video I told you, he takes the example of software, and if a software is installed in multiple places with multiple clients, then there's replicability in that product or system, which further leads to economies of scale that comes from maintaining and upgrading that software. This demonstration effect is exactly the framework he employed when he invested in Majesco Limited, which gave that massive dividend in 2020, and it's also his thought process behind investing in fabled fintech, which has grown to become one of India's leading cross-border payment processing solution. In fact, what drove Mr. Kacholia to fable fintech was the fact that
So in the case of Fable, the biggest thing that the hook that drew me into the company was that 9 out of 10 India's private largest banks are its customers for its money transfer software.
okay, I'll move a little faster now, and what's very evident is that Mr. Kacholia's investing strategy adheres to, or rather borrows inspiration from Warren Buffett, wherein he looks for undervalued businesses. There are tons of examples to this effect, and just from the current list of companies, we have E2E Networks, SG FinServe, Xpro, Beta Drugs, Finiotex Chemicals, Phase 3, Safari Industries, etc., that have all become mega multi-baggers for him. Another element of Mr. Kacholia's investing strategy is to invest in simple businesses, and by simple, I mean companies that are really focused and excel in just one or two areas. Unsurprisingly, these kinds of companies are often found within the small and mid-cap space. In fact, when analyzing Mr. Kacholia's current portfolio of companies, I was surprised to see all 38 companies where he has a holding of more than 1%. All these companies have a market cap of less than 12,000 crores, which means forget small caps. Mr. Kacholia can be labeled more as a micro cap investor, with some companies like Beta Drugs, Inflame Appliances, Aimtron, Knowledge Marine, Vasa, Denticity, and others still listed in the SME exchange. Again, this list gives us much evidence that many of Mr. Kacholia's stock picks serve some competitive advantage, a moat as you and I call it, which can range from some unique technology, geographical dominance, strong branding, market leadership, sunrise sectors, and themes like that. Another critical aspect of Mr. Kacholia's strategy is his insistence on high quality management, and very clearly Mr. Kacholia prioritizes leaders with a proven track record of integrity, performance, and their ability to execute. And finally, let's talk about the length of Mr. Kacholia's holdings. Now, when I mapped out the buy-sell transactions over the last many years, the average holding period came to about 2.5 years. Of course, there were companies like Web of Global, NIIT, Moltech Packaging, Shelly Engineering Plastics, Poly Medicure, Beta Drugs, etc., where Mr. Kacholia was and in some cases is still invested for a longish period, and there were others where he pulled out within a year, which probably suggests that while he might aim for long-term investments, Mr. Kacholia is not hesitant of exiting companies if they aren't moving in the right direction. This flexibility is a hallmark of his investing style and one of the reasons he's been so successful. But I must say, all this requires a lot of experience, analysis, a lot of information, and more importantly, how to use all that information and to structure it in a way that works to your advantage. Which brings me to Tickertape, the sponsors of today's video and a comprehensive stock analysis platform with a variety of useful tools, including a powerful screener that helps you create custom screens or explore pre-built ones like dividend gems, cash-rich small caps, momentum monsters, etc. There's also a comprehensive portfolio tracker that automatically updates your stock, mutual fund, and gold investments, offering insights like your diversification score, XIRR analysis, red flag alerts, forecasts, and much more. For every company, there's an impressive scorecard offering valuable information across key parameters like the stock's performance, valuation, growth potential, profitability, and optimal entry point. And of course, there's the market mover feature that helps you track the week's largest deals, see what renowned HNI and institutional investors are buying and selling, and even spot what promoters are doing with their shareholding. There's so much more to explore on Tickertape, and while some of these advanced tools are a part of the Pro plan, here's the good news. As a special bonus for my viewers, Tickertape is offering an exclusive 40% discount on the Pro plan for a limited time period. While signing up, just use the code in this video's description and get ready to unlock a host of powerful tools that will make your investing a lot smarter. Right, so before we get into the shameless cloning part of Mr. Kacholia's trades, let's look at how his current portfolio is designed. Please remember, these 38 companies is where he has a shareholding of more than 1% and is what he has disclosed as of September 2024. So if you're asking me how many stocks he actually holds, I'll probably say it's a lot higher, like say 80, 90, 100 stocks, including a bunch of unlisted companies and startups where he's also invested in. But we'll stick to our special Artis, 38 companies, and as I said earlier, everything is a micro cap with an average market cap of some 2000 odd crores. I also looked at sectors, and although this seems a little dispersed, Mr. Kacholia does show a preference for chemical businesses, material companies, small tech players, and of course, manufacturing and infrastructure companies. Notice there aren't too many financial institutions here. In fact, there's just one, SG FinServ, which is more into supply chain financing. I even went through data from the past 10 years and I couldn't find any BFSI company, which seems to suggest that these aren't within Mr. Kacholia's circle of competence. Digging deeper into the numbers, I noticed another trend, that is, our 38 companies wouldn't typically be considered as cheap by classical value investors, at least not when one examines their P multiple or their price to book ratios. I mean, look at the P ratio and one can see a majority of companies having a multiple of 50 or more. But where Mr. Kacholia makes up for this is from the sales growth angle, with the average company in his portfolio clocking a sales CAGR of at least 20% over the short and the long term. Mr. Kacholia's focus on growth became even more evident when I examined the EPS numbers, with half of his portfolio companies growing their EPS annually by at least 30%. I've said it before, I'll say it again. Over the long run, a company's stock price often aligns with changes in its EPS, and by opting for companies that are upping their EPS, Mr. Kacholia is giving his portfolio every chance of performing well. And it's something I try to do in my newsletters. That is, I try to identify companies that are likely to grow by leaps and bounds. So companies like BLS International, Zaggle Prepaid, Sky Gold Limited, Garware High-Tech Films, etc. as I match growth, valuations, management quality and competitive advantages a lot like how Mr. Kacholia does it. In fact, I've just released a quarterly update on how the companies I featured in my newsletters have performed as compared to my original thesis. This is one issue of my newsletter you don't want to miss out on. So if you haven't subscribed to my newsletter, do that now and also tell your friends about it. Alright, so this was a question I always had. That is, if someone were to copy Mr. Kacholia's trades, how much returns would they have made based on the data available to us? So this is like my video on shameless cloning, right? But now that I think of it, I'll say I'm already a bit of a Kacholia cloner, and three of the companies I covered in my newsletter, Zaggle Prepaid, Sky Gold and Garware High-Tech, well, Mr. Kacholia holds or held a stake in all these three companies, which gives you yet another reason to subscribe to my newsletter. But let's talk numbers, and because this analysis might have become super complicated, I chose to look at performance over the last 3 years. So October of 2021 until this month, that is November of 2024. And what I figured is if I had invested 10,000 rupees in each of the 69 stocks, so that's the list I compiled. So if one had invested 10,000 whenever Mr. Kacholia first entered the stock, and had I sold that stock in the quarter he exited, or if I had held on to it until today, that is the 15th of November, then I would have made an annualized return of 25.8%. 25% seems a bit low, doesn't it? Then again, let me add this disclaimer that this isn't a precise number, as I had made several assumptions while compiling this analysis, and if you start poking at my worksheet, you'll probably find a dozen flaws, which is why I'm not sharing this. And more importantly, let's not get too much caught up in the numbers itself. Instead, the real value here lies in the lessons I uncovered while doing this exercise. For instance, the first learning is the flexibility shown by Mr. Kacholia in moving in and out of companies, or at least reducing his shareholding in a company if the execution does not meet his thesis. I think we've touched upon this earlier, where I said the average holding period is 2.5 years. But if one looks a layer deeper, it's evident that Mr. Kacholia is using this filtering process to identify and stick onto a few long-term potential multibaggers for his core portfolio. My second learning here is that everyone makes mistakes. In fact, figure this. From the 69 companies compiled in this worksheet, 1 in 4, so 25% of the companies here were either exited by Mr. Kacholia at a loss, or he's still holding on to it at an unrealized loss. And remember, this 1 in 4 number is in spite of the fact that small cap and micro caps have had a great run from 2021 onwards. Of course, as I don't have specific details of any trade, there will surely be some discrepancy in these numbers, but my point is, and very specific to this section, the takeaway here should not be about copying or duplicating Ashish Kacholia's portfolio, but instead it's about understanding and replicating his principles and using those to refine and improve our own investment approach. Alright, so let's recap what we have learned from this video and the valuable lessons we can derive from Ashish Kacholia's journey over the past many years. Number one, do your homework. Thorough research is absolutely non negotiable, and especially when diving into small cap and micro cap stocks, as these often require a deeper understanding and meticulous analysis. Lesson two, always have a blueprint in terms of what sectors you want to focus on. For example, Mr. Kacholia has chemicals, manufacturing, materials, etc. in his portfolio, and the type of business you want to invest in. And please recall, Mr. Kacholia has a bias towards businesses with a competitive edge, a unique offering that can be easily scaled. Thirdly, Mr. Kacholia's portfolio shows a clear preference for companies achieving consistent growth, with sales and profits growing by at least 20%, making his style of investing a little go-between of a value style and a growth style of investing, something like a GARP. And yes, I do have a video on this on my channel. If you need help analyzing such opportunities, platforms like Tickertape can be a game changer. And remember, as a special bonus for my viewers, Tickertape is offering an exclusive 40% discount on the Pro plan for a limited time period. Let's continue. And when it comes to execution, Mr. Kacholia comes out as a patient investor, and as revealed from his buy-sell patterns, he reviews his holdings, often giving every company a few quarters to see if his investment thesis is playing out. If the execution is in line with the plans, he continues with the company. But if he starts finding glaring gaps, then Mr. Kacholia isn't shy of moving out, of exiting that business and identifying other opportunities. And finally, Mr. Kacholia isn't like those 5 or 10 stocks for a lifetime concentration heavy kind of investors. He prefers to diversify investments across sectors, which is especially important in small and micro caps, which are generally a bit volatile. In my view, Ashish Kacholia's success isn't just about picking stocks, it's about discipline, strategy, and a relentless focus on fundamentals. If you're inspired to follow in his footsteps, then do use his portfolio and investing style as your guide, but not as a strict playbook, in the sense that don't copy it, but adapt it to your specific investment strategy. I sincerely hope you like this presentation and will derive many lessons from it. Once again, thank you for your time. Do like this video, do subscribe to my newsletter, and I'll see you very soon. Until then.